All right, everyone. Good afternoon. It's Ron Toy with the Ron Toy team at Cross Country Mortgage, doing my Monday mortgage market update live. Sometimes it's at different times in the day, sometimes not. But we've got some really good information coming out and responses in the market. Now, it's not going to be like an immediate market rebound, in essence, and a straight line to reduced rates. There's going to be some volatility. But the market's rebounded significantly over the last few days, and you're going to start seeing stuff pumping through your mail and emails and data asking you to refinance and talking about rates. That's why you want to have a good rate lock strategy in place with your loan officer. If you're working with one, call them and ask them, hey, what is our rate lock strategy? What reports are coming out this week that are going to be indicators that could help us see more of a recovery or that we need to get ahead of so that we don't miss out on this opportunity? Make sure you have that in place. That's why I like to do this live, to help empower realtors, buyers, lenders on having these kinds of conversations, and also consumers, so that they are making an informed decision to either refinance or purchase going forward. I'm going to show you the markets, show you what we're looking at, things to look out for, and the economic calendar like I do every week. So let me just get down to the markets, and then I'll flip my camera around, go from there, and walk you through what to ask and what to talk to about when you're talking with a loan officer. So let me just show you. I'm going to flip it around. So sorry, it's kind of janky, but it is what it is. Flip camera. Okay. Hopefully you can see this now. So we have an alert to lock because the market had a little bit of a drop this morning. But you can see how far we were up. We were up in the 102s earlier. Right now we're at 100.176, which is still phenomenal. And I'll show you why that looks that way. So again, we're still way better than we've been in a long time. Let me pop this out 6 months. You can kind of see where we're at. 1 second. Boom. All right, I had to shrink the screen because it was like jacked. And I wish I knew how to do this better for you guys. And I'm still working on it. But look at where we're at. This is the last 6 months. So we're better than we've been in 6 months. Let's go a year. As you can see, we're even better than we've been, or close to where we've been at the best in over a year. This is important. It's going to be amazing to see how this responds. Just keep in mind, for every 1 point drop in rate brings another 2 to 3 million buyers back to the market. Things we're looking at is the jobs report that came out on Friday, and the different jobs information showed that there's weakening in the job market. Not surprising, but it's caused the markets to respond accordingly. But there was some positive information that came out earlier on the jobs market that now has caused this little bit of confusion. But Warren Buffett also sold half of his Apple stock, and it's, causing the world to kind of have this weird situation. But let me show you the 10-year treasury. So we've got the 10-year treasury. Let's pull that map up so you can see where we're at. So the lower this number, the lower rates. As you can see, a year ago, or not a year ago, but back in October, the 10-year treasury was over 5%. So that part of that is the servicing value of loans. Right now, we're down all the way over to here at 3.6387. We want this to continue to go lower. It'd be amazing to see it pop under this floor right here. But let me flip the screen. Oh, first, let me show you the economic calendar. This is kind of a boring, slow week. Nothing real important that's going to cause much movement. The 10-year auction, the 30-year auction, the continuing and initial claims can move it a little bit, but relatively quiet week. Now you guys kind of have an overview of the market, what I look at and track like a hawk. You guys got to have that happening for yourself and the loan officers you're talking to. Tell them, ask them what they subscribe to make sure that they stay current on the market, the trends, and make sure you're an informed consumer. But just so you know, all of us loan officers pretty much trade off of the same market. So our rates are going to be relatively close to the same. So when you're asking the loan officer you're talking to, what is the bond market price that this rate is attached to, and what coupon? Because you want to know that information, because you call me at 9 a.m. and you call someone else at 2 a.m. or 2 p.m., the bond market could have done some adjustments and you're not comparing apples to apples. And I want to make sure you're an empowered, informed consumer and go from there. So thank you everyone who's joining. I'm a local licensed residential mortgage loan officer here in Texas, doing it 10 years. And I do this live every Monday to help empower consumers to make a buying decision. And so thank you so much for joining. If you have questions, put it in the comments. I also upload these to YouTube so that if people miss it or they, didn't get a chance to come in at a certain time, they can go back and watch the live because this stuff is super important information. Being a mortgage loan officer is such an amazing privilege. I get to help people with one of the largest financial decisions they make in their life, maybe do it 2 to 3 times. And it's important. It's stressful. It's in the top 5 stressful things a person goes through. And so if I can help validate that stress, help reduce that by communicating in a way that helps lower those stressful moments, that's what I'm here for, building those relationships. Go ahead and put any questions in the comments you have. In the comment section, you want to book an analysis, put it in there because I want to know, like, if you think you can't, let's talk. If I locked the rate last week, should I explore other lenders since rates are down? No, that's a great question. Before exploring other lenders, what I would suggest is to contact your current lender and ask if they can do a float down. Depending on what day you locked, it can be a different movement. I could show you the chart again if you'd like to see it. But before shopping another lender, I would encourage you to talk to your current loan officer and ask them, hey, can we do a float down? And go on from there. Hey, are you and Monica? Oh, we're doing fantastic. Me and Monica are doing fantastic. We're doing great. They said no float down until 15 days before close. That is something that could be a thing. Some lenders have that. So then at that point, let me just show you the chart again. See what I'm talking about. Sometimes they do wait to 15 days before closing because some lenders can only do one float down. Let me go to 6 months so it's not so overwhelming. 3 months, so it's a little bit shorter. And let me switch back to the actual coupon. So when I'm talking about coupon, this is the coupon, the UMBS 30-year 6%. This is what most people are trading on. This is the bond market price, 101.76. So when I'm telling you, asking what bond market price and coupon, that's why, because as you see the different times, it changes. It's volatile. So depending on when you locked in last week, we could be at a little bit better position because if you locked at 101.55 or 20 basis points better, that could be significant. If you lock those back here, when we're at 101.38, now we're 50 basis points better, that's huge. So this is where you want to have that conversation. Depending on when you would close, now this is at the, you might be able to find this chart other than where I subscribe with MBS Highway. Just look up, maybe if you Google UMBS 30-year 6%, UMBS 30-year 6% coupon, it'll give you a chart. But this is what it looks like currently for the last 3 months. See how volatile it is almost on a daily basis. And when it has this little candlestick, it's like a candle wick, it's showing you where it was and it came down to. Same thing in the bottom. So that's where you're just kind of looking at these different charts. So it's come down today. It was up to 102.16, and right now we're down here at 101.76. They have an inverse relationship. The higher this number, the lower rates. The lower this number, the higher rates. This is what you want to look at. So if you're 15 days from closing, it does put you a little bit tight for shopping. And I hate encouraging people to shop lenders as a lender because I like you to shop them early in the process so you get the best deals. It's just this late after so much work is done, it can kind of be disheartening whenever your client leaves. But you got to do what's right for you and your family. And so if that means leaving, leave. But the market's not as significantly better this week than last week, depending on when you locked. But that's where I would have that conversation with them and see what their lock strategy is. Hey, when are you going to look at a float down for me to make sure that I'm getting the best rates and fees available? Or you can also just call some lenders, get a quote, then send that to your loan officer and say, look, unless you match this, I'm leaving. And usually they can do that because when you provide another LE from another company, they are in compliance with fair lending by giving you a discount because it's in order to keep and shop a rate and keep a client. Whereas if they didn't do that for someone else, it's not like they didn't want to. It's just that they didn't have the same information in order to justify selling a lower rate. Because now lenders can't be paid based on the program or rate you choose. Back in the day, in 2007-8, the financial crisis, if a lender could convince you to take a 7% rate or something crazy, there's yield in a rate typically. Depending on the rate chosen. So now if there's any positive yield, it has to go to the client. Before, it could go to the loan officer if they wanted. So they get their commission plus the extra. That's no longer allowed in mortgage lending. So just know that there's no incentive for the loan officer not to help you in those situations. It's just that sometimes they're handheld and they might not even know it. So I don't want to disempower another loan officer depending on where they're at in their career if they don't know they have that ability. So if you do shop, I would encourage you to take your loan estimate back to your original loan officer. Say, hey, can you guys match this? Especially being this close to closing, because that's a lot of turmoil to switch. And if you can just get the lower rate, great. Now, and that loan officer gets to keep the deal, because most loan officers, if people don't know that, we're 100% commission, but we're different than realtors. Like realtors will get paid on the day that they close. Most of the time, maybe a couple days, depending on how fast the check gets them. As a loan officer, we're W-2'd, even though we're 100% commission. So we don't get paid sometimes for 2 weeks between it closes. And if it gets moved a day, then it could end up being paid at the end of the month. So we are not like realtors in that sense. So we want to do everything we can to help you close as soon as possible so that we get paid. But I don't want you to miss out opportunities because you're worried about that. Your long-term financial success is the most important. Just giving you the full behind the scene picture so that you know how it works on the back end and can make the decision that's right for you and your family. But yeah. And if you want a quote from me, you can go ahead and email me. I'll send you some numbers too, and also what to remind them. But ultimately, my encouragement would be to help you close with that current loan officer and make sure you get the best rates and terms with them. And I catch you on the refi. That's kind of my mindset on that deal. If anyone else has any questions, feel free to put them in the comments. Rex, I saw that you asked about Monica. We had a great weekend. We were in Houston. Unfortunately, on yesterday when we got home, our cat, Bruce, one of our cats, he started having this weird reaction and just was like coughing and puking. And I thought it was just a reaction to a treat, but Monica was smart enough to take him to the vet, and he was having some kind of heart situation, and we had to put him to sleep, and that was devastating because I didn't think that he was in bad shape, and so I didn't go with her. And now I'm like in this weird realm of what the heck, my cat is not here. So it's interesting. Plus I've had to deal with a lot of learning emotions and stuff like that through trauma and therapy, and so I don't know how to process what I'm going through. It just weird is the best way I can describe it. But overall, great. Just that one thing is kind of weird. Yeah, but markets. This is one thing I want to make sure you keep in mind, because if you do own a home, you're going to be inundated with people trying to get you to refinance now because the markets have been slow and a lot of loan officers' productions have been down. You don't want to miss out by jumping at an opportunity now where maybe if you wait a couple more days, obviously timing the market can be tough because we don't know what could happen. But that's where you want to have a good rate lock strategy, especially if you're looking at refinance with your loan officer, so that you can put together a plan. And also understanding how much longer you're going to be in your home. Because if you're only going to be in your home a little bit longer and you're not sure why you're refinancing, you just think I want to save a little bit of money. Yes, you might be able to save a little bit of money, but you could end up robbing from your equity position if you're looking at selling soon. So that's where you just want to look at a whole picture, not just what you can save on a month-to-month basis. And if it makes sense, great. If it doesn't, then you know that at least you did the work to be successful in your home ownership. Just don't get sucked in by these mailers, because companies out there can buy data. They can say, okay, put in this aggregate data. I want to buy the data on everybody who owns a home in this area that's been in it for longer than this amount of time, because then they can kind of make a rough estimate of where you are in your equity and also interest rates, and just kind of target you and say, oh yeah, we can get you a 3.99 rate, without telling you that that's on a 15-year mortgage, assuming you have perfect credit, assuming you have no debts, and buying down 3 points or some kind of crazy scenario, but they're not going to put that in the advertisement. So you want to call your loan officer. If you had a good experience with the one you closed with originally when you bought the house, call them first. Build the relationship. If they haven't taken care of you and they're not communicating and you didn't have a great one, Google who's the best in your area. You can reach out to me. I'm happy to help. But my channel is here to help empower and educate, not just try to ask for stuff. If you want to send me stuff, cool. If not, take my information, use it for your highest and best, and protect your assets. 2/3 of the wealth in our country is tied to the equity we have in homes. Equity position right now is the highest it's ever been. The average equity position is over 60%. This is important. Plus, you want to make sure you're managing your equity position to avoid potential tax liabilities later, capital gains, or different taxes like that. So it's a lot. That's why you have loan officer here who's going to help your realtors and go from there. But if you have questions, put it in the comments. Again, Ron Toy with the Ron Toy team at Cross Country Mortgage, a licensed residential mortgage loan officer here in Texas. Happy to answer questions. Talk about qualifications. If you were like, hey, could I even buy a house? My credit's X, my income's this. What would my payments look like? I'm happy to do consultations. I have a link in my bio for my calendar. It costs you nothing. Get some information. And if you're not here in Texas, I can connect you with a good loan officer in your area, but I want to make sure you feel ready to buy because home prices are not dropping anytime soon. If you think they are, put it in the comments and I'll help you see why that's not going to be the case. Also, sharing information and communication on what reports you should be looking at as consumers. Because before I was in this business, I didn't even know that there was a thing called a CPI report, a consumer price index, or PPI, producer price index report. I didn't know any of that, but it's there. And you can go and pull up the data for any period of time you want. Just go to bls.gov. It's Bureau of Labor and Statistics, and it has all kind of cool, fun information. But why those two reports are so important, it will show you by industry the price difference and what their impact on inflation. Kind of like automobile insurance has a huge impact on inflation numbers and what percentage of their business impacts inflation. So that's where you want to kind of get this information so that you are an informed consumer and not just being led here and there by somebody on Yahoo News that probably just graduated college. Nothing against that, but don't have necessarily real world experience to be telling people if they should or shouldn't buy a home because it looks like 2007 and 8, even though it has nothing anywhere close to what it looked like in 2007 and 8. It's more closer to the 80s where inflation was high and rates were high, but home prices in the 80s went up every single year. And that's the part where people are missing out. Opportunity cost of waiting is staggering. Think about this. Average rent here in North Texas is about $2,000 a month. Well, that's 24 grand in a year. Let's call it a $300,000 house. Well, home prices here in North Texas, on average, depending on where you're at, go up about 7%. So that's 21 grand in a year. If you add the 24 grand and your 21 grand, you're at nearly $50,000 in opportunity cost for 1 year of waiting. Most people can't afford to just give away 50 grand. And this isn't even counting the tax savings or the savings that you get through principal balance reduction. Every time you make your payment, you're creating equity through reducing your principal balance. That's why home ownership is so important. If you're going to be spending money somewhere, you are paying a mortgage. It's just not your own. So that's where I'm a little bit different. I'm telling you to buy what you can comfortably afford. I'm not a realtor. I'm not trying to sell you a house. I want to give you the money to invest. But I also want to make sure you're set up for success because if you don't have somebody telling you, how many doors do you want to own? What kind of passive income do you want to have? You might be a first-time home buyer now, but maybe you have dreams and aspirations of owning 6, 7, 10 properties. And if nobody's going to give you a concise plan to help you achieve that goal, and also mirror that and connect you with tax professionals and investment professionals so that you are setting up each property in a way that's going to protect you from civil liability and other things, then you're not really getting the service that you are deserving of. That's why I'm here, to connect and empower and make sure the consumers who work with me are informed and empowered consumers. So I'm about to jet if nobody has any questions. Again, you can find this on my YouTube. I try to update it within a couple of days of doing the live. Go ahead and put that in the comments. Book some time to talk. Again, I'm a local licensed residential mortgage loan officer. I've also been talking with some other loan officers around the country about doing a group live to where we're asking and answering questions of the audience. I follow some really great loan officers. There's some awesome ones out there. Cat Loans, you can look her up on this. She's a boss. Carlos Munoz, he's amazing. All of them are licensed in different states. And that's where I like to talk because your loan officer should be a relationship. You want to interview them and ask them questions to get to know if you like them as a person because we do business with those we know, like, and trust. Find out if you like them and if they're along for the long-term journey or if they're going to treat you like a transaction. If they're going to treat you like a transaction, next. But that's where you want to interview. Talk, ask great questions. What are their goals? How much longer do they plan on being in the business? What got them in the business? What's their biggest success? What is their one regret? Find out what motivates your loan officer. And does that align with your same mindset? If it doesn't? Cool. But this is where I have a different approach. I'm a relationship guy versus a transaction guy. you have any questions, put in the comments. But if you're a loan officer out there or realtor, this is a great time to contact your database, your past clients, your current clients, and have this conversation. Hey, I was on a live today with a mortgage loan officer, and he was talking about how the rates are coming down. Have you talked with whatever lender you connected them with and ask about your rate lock strategy? This might be a good time. Or if they're a homeowner, asking them, hey, where does your equity position need to be for you to think about listing? Are you thinking about listing? No. Do you know how much your home value has gone up over the last X amount of years? So if you're a realtor, that's why I do these lives as well, not just to empower consumers, but to give you ideas on what to talk about on your calls for the week. Talk about the unemployment numbers coming out on Friday. Talk to them about the bond market, and the average appreciation rate right now in the country is on trend for near 7%. To ask them, hey, did you know that there was a website called the BLS, the Bureau of Labor and Statistics, and you can see the consumer price index? No, I didn't either. I was on a live with a loan officer and I thought it was cool, and I wanted to call my clients to encourage them to check it out. This is about us helping each other be better business professionals so that we're better for the clients that we serve. Having those conversations, touching base. Right now, as a loan officer, we need to be calling all of our clients and asking them and doing an in-depth, I call it like a equity analysis, finding out where they're at, their plans, where does the target rate need to be before we pull the trigger to refi, and setting them up for that success. Because you've seen how the market is volatile. You want to make sure that you are helping them with a rate lock timing strategy that empowers them so that, hey, when rates hit this number, are you good for us to go ahead and lock? Because we don't want to miss out. Yes, have them sign the rate lock agreement and then watch the market for them. Put a reminder on your CRM, and as soon as it hits that, boom, lock. Now you have your client set up for success, but you've done it proactively instead of reacting, and now you're competing against 123lender.com, who does not care about your client, doesn't care about the relationship or their long-term success. They just want that transaction. And maybe if your client's about to sell in 2 years, having them refinance is not the best for them. Maybe having them talk to their insurance company and getting a quote to reduce their escrow account could be more beneficial than having them refinance. Or maybe they don't have the right exemptions on their property yet, and by doing that would help them reduce their payment by reducing their escrow account. There's ways to help lower payments without refinancing. Or if they've been in their home for a few years and they're in a conventional loan, they can get rid of mortgage insurance by just contacting their servicer and saying, hey, I think I'm at a 20% or better equity position, pay for the appraisal, and then boop, now their mortgage insurance is removed, saving them money. This is why you want to make sure you're proactive in your business versus reactive, because the person that's going to call them doesn't know them, care, and they're not going to give them those tips because they want that commission. Let's not let our clients get taken advantage of. If you have questions, reach out to me. I'm happy to help, connect you with a loan officer in your area. But as I always say, first and foremost, if you had a good experience with your previous loan officer, contact him or her first before reaching out to someone else. As a loan officer, I would hope other loan officers would encourage a person to reach out to me before, doing anything else. But I'm going to be the change in the world that I want to see and not worry about if others are doing it. Reach out to them first. Give them the opportunity to look at your file before reaching out to someone you don't know. Talk to you soon.